All right, let's dive right in. Today, we're talking about PEXA Group. You know, the company that basically is the Australian digital property market. They've just made a massive strategic shakeup, and we're going to unpack what's really going on behind the scenes. So here's the big question, right? Why on earth would a company with a 99% market share suddenly decide to sell off a piece of its business? I mean, when you've got a near total monopoly, why would you change anything? It sounds kind of crazy, but trust me, there's a method to the madness. It's all about protecting their fortress and bankrolling a really high-stakes gamble. Okay, so this is what kicked the whole thing off. On February 16th, PEXA dropped the news they're exiting their entire digital solutions business. And listen, this wasn't just some minor adjustment. No, this was a complete, fundamental shift in strategy for the whole company. So, to really get why they made this move, you first have to understand what they're trying to protect. The best way to think about PEXA's core business in Australia, it's like this massive, impenetrable fortress. And they've basically spent the last year just making those walls even higher and stronger. I mean, just look at this number, 99%. It's just staggering, right? When you talk about refinancing a house in Australia, PEXA is handling pretty much every single transaction. You just can't get much closer to a total monopoly than that. And it's not just refinancing either. When it comes to actually buying and selling a house, they're still processing a massive 80 to 90% of all those deals. This is the golden goose, right? It's the cash cow they have to protect no matter what. But, and this is a big but, that fortress was actually under attack. The whole threat came down to this one word: interoperability. It sounds complicated, but the idea was pretty simple. Regulators wanted to force PEXA to open up its system, let smaller competitors simply plug right in and compete for business. For PEXA, this would have been like putting a giant crack right down the middle of their fortress wall. But then, just a little while ago, the regulator came in and basically slammed the door on that idea. They looked at it, they reviewed it, and their conclusion was, quote, no compelling case for the reform. They were worried about stability, the high costs, you name it. So what's the bottom line here? PEXA won. They successfully defended their moat. The fortress is now secure. All right, so with things locked down at home, PEXA could finally turn its full attention to its next big move. And it is a big one. We're talking about a massive, high-risk, but potentially super high-reward expansion into the UK. This is where they see all their future growth coming from. And look, this isn't just some pipe dream. They're already making real progress. They kicked things off a couple of years ago, but the real game changer? That happened last year when a huge bank, NatWest, officially signed on. That deal is about to go live, and everyone sees it as the key that could unlock the entire UK market for them. But, as you can imagine, trying to conquer a new market like the UK, well, it costs a ton of money. So what's the price tag on this gamble? PEXA expects to burn through about 61 million Australian dollars just this year, simply to fund that international growth. That's a huge chunk of change, and it really starts to explain why they made this big pivot back home. Okay, so let's follow the money. How does this all actually add up? Getting rid of that digital solutions business wasn't just about being more focused. It was about freeing up a whole lot of cash to pour into that UK gamble, and at the same time, make the main company way more profitable. And just look at this. The impact is instant. You can see it right here. Before this big move, their profit margin guidance was kind of stuck in that 32 to 35% range. But now, after dropping that less profitable division, their new guidance jumps up to a much stronger 34 to 37%. Now that is exactly the kind of thing investors love to see. This table really lays it all out. Yeah, okay, their total revenue is going to dip a little bit. That makes sense. They sold part of the company. But check out the numbers that really matter. The profit margin, that EBITDA margin, up. Their core profit after tax, it's basically doubled. And their capital spending, what they call CapEx, is down big time. It's the classic story. They're spending less to make more money. And if you want to boil it all down to one number, here it is. This whole move is going to save the company at least $10 million every single year. And guess where that cash is going? Yep, straight into making that UK expansion a huge success. So, the strategy is crystal clear now, right? You protect the fortress in Australia, use all that cash to fund the big gamble in the UK, and you trim the fat to become way more profitable. The big question now is, what does all this mean for the company's stock price? And this is where things get super interesting, especially if you're an investor. Right now, the stock is trading at around 14, 15 bucks. But the analysts who crunch the numbers for a living, they think the real or fair value of the company is actually closer to $27. That is a huge gap. It kind of suggests that the market just hasn't woken up to what this strategic change really means yet.
Now, of course, it's not a slam dunk. There are definitely risks. The UK expansion could hit some snags, a slow property market would hurt them, and they are carrying a lot of debt. But the flip side, the opportunities are massive. We're talking higher profit margins, that rock-solid moat back in Australia, and the huge potential of finally cracking the UK market.
So we kind of end up right back where we started. PEXA has made a really bold play here. They've simplified things, defended their home turf, and gone all in on their biggest shot at growth. All the pieces on the chessboard are now in the right place. The only question left is, can they pull it off? Can they execute? We'll have to wait and see. Thanks for tuning in.